Hey, this is Chris. Now, over the last 10 years or so, technology as a sector has performed extremely well, and because of this, there's been a proliferation of new tech-focused ETFs listed on markets, both here in Australia and overseas. So in this video, I'm going to be talking about the three specific areas of tech ETFs to consider when you're building a portfolio and give the pros and cons of each, and then talk about the tech ETFs that we offer for clients and why. So there are basically three categories of tech ETFs you can consider in your portfolio. The first group I would call are the broad market tech ETFs. In Australia, these include Tech, TECH, as well as Asia, which provides Asian technology companies, and the NASDAQ ETF, which provides US technology companies. What these ETFs tend to have in common is that they follow either the whole world technology, the tech ETF, or a particular geography like Asia or the US, but they're very broad, they have lots of different companies in them, and they tend to be very well diversified across the whole tech sector. So they give you slightly more stable returns than the next group, which are the more niche tech ETFs. Now, niche tech ETFs have really exploded in popularity over the last few years to really hone in on a very specific area of technology. So in Australia, there is, for instance, the AI and automation ETF, the esports and gaming ETF, there is the ACDC, which is the battery technology ETF. Now, these are obviously quite specific segments of technology that may do exceptionally well or may not perform as well, but you've got a very closely linked bunch of companies in that portfolio. Now, something I'm quite cautious about these group of ETFs is because even though they may have really fantastic periods of returns, and the ACDC battery technology ETF is a good example. It's had returns of over 50% over the last year. These more niche ETFs in general are also more susceptible to getting shut down if they do have a period of poor performance over a few years and see a lot of money coming out of them. ETF issuers may not be willing to continue to support them. And what we've seen in the US over the last year is a huge number of ETFs getting shut down when they're in niche areas that don't attract a lot of popularity. So just be a little bit cautious if you're going into these niche areas rather than the broad ones, that you want to be finding ETFs that are going to last the distance and not get shut down after a few years. The other group and the third group to consider are active ETFs. Now, this isn't a group that we focus on at StockSpot for the reason that, broadly speaking, active funds tend to do worse than index funds, but there has been an enormous amount of interest in one particular active technology ETF in the US, which is the ARK ETF. The reason being is that the performance of this ETF has been sensational because of holding stocks like Tesla and other big secular trend type companies. It has performed very well. However, I would also be cautious about active ETFs for the same reason we're very cautious about active funds, that funds or fund managers that tend to have a good streak of performance, that good streak is often followed by an equally poor streak. And so getting excited about these types of ETFs, after a really good streak, you risk not only the sector of the market not performing for a period of time, but the actual fund manager not performing. And so while you could have doubled up on that excitement on the way up, you could also double down on the poor performance on the way down. So broadly speaking, there are three different groups. There are the very broad market ones, there are the more niche ones, and there are the active technology ETFs. There are pros and cons of each of these types of ETFs. For StockSpot clients, we offer two of these as themes, and they're both broad market ETFs. There is the Asia Technology ETF, which basically gives you exposure to the biggest technology companies in Asia, and particularly China, as well as the NASDAQ ETF, the NDQ, which gives you exposure to the US technology companies, particularly the famous Amazons and Apples and Facebooks of the world. Both of these we think give very broad exposure. They have relatively low fees, they're quite liquid, and they track indices that have been around for a while. And these are the sort of characteristics we look for generally in ETFs. And we think if you're looking particularly at technology ETFs, you still need to be looking for those same broad characteristics. If you like this video or want to learn more about how to pick different types of ETFs, please subscribe to our channel below.